pips, then we capitalize on what we see. Wanna go to Pitville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pitville.
What's going on, you guys? I want to welcome you back to my channel. And in this video, we're going to break down step by step how we caught this 95 pip sniper on gold. We're going to go through our entire approach, what we saw when we went to the market, how we broke it down, and everything. And hopefully this particular strategy or video can help or bless somebody to use it, you know, when they kind of see it in the market. Okay. So initially when we started looking at gold, we noticed that gold was in essence bearish. You know, we can see we had lower low, lower high, lower low in this area here. And one of the things that we noticed on the 15-minute time frame is that we started to see the market turn around, so to speak. And if you look closely, you can see that we almost had a inverted head and shoulders as well on a smaller time frame. That kind of lets you know that the market wanted to kind of, you know, reverse and things like that. All right. So one of the things that we always want to look for when we see the market turning around, what actually stopped this point here? What caused the market to actually turn around? Okay, so I'm gonna go to the 4 hour for a second, and I'm gonna look at price action over here, and I'm just gonna draw a small box from over here all the way to the bottom of this wick right here, because I want to see exactly what's happening in this area here. Okay, let's go back to the 15-minute, and we're gonna scroll all the way over. Okay, just to kind of see if there are any order blocks or imbalances that might have caused price to turn around. And if you guys notice, right in this area, we have an imbalance right here on the 15-minute that has not been mitigated yet. Okay, so right in this area, we can see this is where price actually stopped. So let's go back over to current price. Okay, and we can see price literally stopped right at this point here. So from here, we started to break down the different parameters within Wyckoff. And usually within Wyckoff, we want to see 3 drives down and 2 drives up. Okay, when we're looking for an accumulation to shoot to the top side. So we'll drop it down to the 5-minute time frame. And then as we can see, we have 1, 2, 3 drives down, and we have 1 and 2 drives up. Okay, so first thing we want to do is we want to mark our furthest point to the bottom, which is our spring. Okay, our spring is always number 1. From there, we want to look at our ST of Sal, which is our sign of weakness. And from there, we want to look at our selling climax. All right, now we have these 3 points here. Okay, next, from our selling climax, we have an automatic rally or automatic reaction, however you want to call it or look at it. And then we want to see if we have a point that's higher than this area. So this wick is not, and when we move over, we have a UA, okay, which is an up thrust action. All right, so now that we have our parameters, we can start to draw on our trading range, which is usually drawn on from our SC and also our AR. This is where our trading range usually aligns. Okay, and so whenever we're looking for entries and things like that, we always want to look for entries in this leg of structure here. Anything in this area here after the spring, we want to start to look for entries. And a couple of things that we want to look for: we want to look for order blocks, we want to look for unhealthy price action, we want to look for imbalances, things that will align with our SC or our AR for price to possibly come back and tap into. Okay, and usually when we have those things, those are considered as trading range alignment. Okay, now before we look for entries, we want price to break our UA, because when price break this point here, this is a break of structure. If we don't have a break of structure, we're not going to necessarily look for entries, because if we don't get a break of structure, then price is probably going to continue in a downtrend. However, if we get that break of structure retest, we can look for price to shoot to the top side. One of the things that we did notice though, aligning with our SC, is we have this order block here. Okay, and so usually when we have order blocks and you have this smaller candle with the big candle here, which is a bullish engulfing, we want to use a Gann box or a Fibonacci tool, whichever one you want to do, and we want to measure 50% of that particular candle, body to body. Okay, 50%. And so this area here would be considered as our entry point. Okay, for a potential entry. All right, now let's go ahead and play price and see exactly what it's going to do. Okay, we can see price is going up. We, still playing. Okay, so now these wicks here is pretty much liquidity. I don't necessarily consider this here as a break of structure until we get body closures. And as you can see, we have body closures above this break of structure, which is a valid BOS. Okay, so now what we can start to look for is our entry point. Because it's valid, we have a break of structure. We want to see price pull back and possibly give us that push to the upside. So now we can take out our long tool and place that here. Now with gold, I usually like to do about 20 pips or so. Normally I would do 10 or less, but with gold, because gold is very wicky, we want to make sure that we do at least 20 pips or so. So we want to probably put our TP right here at these bodies here to kind of cover this area here. Okay, and so if we go ahead and move this over a tad, and let's go ahead and determine exactly where we want our TP to be. So if you notice, we want to look for equal highs and things like that, where more bodies of candles actually meet. So if we look at this area here, let's see what we're looking at in this area right here. We notice that we have body closures in this area here, so we can utilize that as our TP. Go back to the 5 minute and want to make sure this is notated as our stop loss. Okay, there we go. All right, let's go ahead and make sure that we have all parameters. We have 3 drives down, 2 drives up, and let's see if we can actually get a wick in and see what it does. As we play price, we see price came down, wick this in, little to no drawdown, and straight to our TP. Now, one of the things I want you guys to understand when dealing with Wyckoff trades, you must have all of your confirmations or all of your parameters aligned. One of the most important things that some traders forget to do is find a previous point of interest here. The spring must tap into a previous point of interest. There has to be something to drive this spring to actually shoot up. If you just have a spring just in the middle of nowhere, then that invalidates the entire Wyckoff schematic. So always remember, you want your spring to tap into a point of interest, whether that is an order block or an imbalance. And then that's going to give us that push up from this leg here. From there, in this particular leg, this entire leg here, that's what we want to actually look for our break of structure or chill, however you want to look at it within this area. You want to see if you can get trading range alignment. Trading range alignment is not a requirement, it's a confirmation. So sometimes you might have your trading range might be a little bit away from your entry and things like that, and that's okay. However, if you do have a trade that has trading range alignment that can align with your entry, then that serves for high probability trades. Okay, and as you can see, 50% of our order block is what we're looking for, and price wicked into this area and decided to shoot off. Okay, hey, I hope this was informative, you guys, and I'd like to thank you for watching.
First we strategize, then we capitalize on what we see. Wanna go to Pitville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pitville.